right, I see everyone's jumping on. Great to see here. My name's Aaron Fragnito with People's Capital Group, and I'm going to speak today about a new private offering we're putting out to our investor group. And I'll be going over some of the details of this new offering here. So this is an interesting opportunity. We just placed under contract. It's an opportunity to invest in and contribute toward the transformation of a historical city in New Jersey here, Passaic, New Jersey, which is in Passaic County, New Jersey as well, near Bergen County. It lies in the community of Manhattan about an hour, so it fits our criteria very nicely. This is a value-add apartment building. It's 42 units, and we'll be putting this out to our qualified investors. So, a quick disclaimer, this is not a solicitation for funds, tax advice, or legal advice. We can only work with accredited investors. There is an accreditation process that is done right through our investor portal, and I can talk more about that towards the end. So an accredited investor is someone with a net worth of $1 million, not including their primary residence, or an income of $200,000 individually, or $300,000 including their spouse. That's an accredited investor, and the intention to make the same next year. So we are only working with accredited investors, family offices, RIAs on this offering here. If you're not an accredited investor, we do have investment opportunities for non-accredited, sophisticated investors in our debt fund, where you can actually be a lender and earn an interest rate. But that's not what this presentation is about here. This is about this apartment building. That's a Class C building. We're going to be converting and repositioning into a Class B building. So let's break right into the details here. This is a property that has 42 residential units. It's strictly residential. It is 100% occupied. Rents are about 30%, about 27% below market value. We'll raise about $4.1 million for this asset. We're targeting a net LP IRR. That's an internal rate of return, which takes into account the time value your money is at work, of 20.3%. That's for the higher share class, where the minimum investment is $1 million. There's also another share class, a Class C, where the minimum investment is $100,000. That's targeting an 18.9% IRR, still very strong IRR. Our net LP multiple on your investment, your equity multiple, is about 2x. So meaning if you invest $1 million, in this case, you'd expect to exit with $2 million over the 5-year investment period. It's roughly the same. It's about 1.9x for the $100,000 share class. That's about, so again, if you invest $100,000, you'd expect to exit in total between cash flow, refinance payout, and sale proceeds about $190,000 on your investment. At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. A little bit about People's Capital Group here. We've been focused on New Jersey over the last decade, specifically repositioning apartment buildings like this, taking Class C apartment buildings and transitioning them into Class B, improving the units physically with a large CapEx budget, giving them additional amenities. In this case, we're going to install storage in the basement, laundry facilities, revamp the backyard so we have a nice dog run, little picnic area, and a jungle gym for the kiddos. All right. So investment highlights. August 24th here, August 20, 2024, we're placing this under contract. We have about $182,000 per unit purchase price. We expect the sale appraisal, or actually the stabilization appraisal, to come in at $12.3 million once we have this completely renovated and leased up for fair market value. Quick note here, the 2-bedroom units are actually currently being rented for $2,100. We target $2,150 for our renovated 2-bedrooms. Now, there's a lot of units that are under leased right now, way under $2,100, but he's already getting, current landlord, $2,100 for unrenovated 2-bedrooms. We plan on completely renovating the building, creating better common areas and giving it more amenities to the tenants and improving management of the property. And we're targeting a $2,150 rent. So I think a very attainable rent. I think we'll probably even get a little more than that, but we always want to under promise and over deliver when we're repositioning an apartment building for our investors. Anyway, so as we refinance, we expect to unlock about 3.6 million. So that means investors will get back about 85% of their investment. That's our target at that refinance. So we're purchasing it for 7.65 million. It's 42 units, 182,000 per unit. We're targeting, these are project level metrics, a 2.13 equity multiple. It's about a 16.3 average annualized return that takes into account the cash flow, the refinance proceeds, and the sale proceeds. And it's a gross level, project level 21.8 IRR on this asset. 5% unlevered going in yield, 7% stabilized cash on cash. So once the asset is stabilized, we expect a 7% cash flow on the property. Once we refinance, that becomes about 6% on the asset. Our restabilized yield on cost is 8%. Here's a quick kind of overview on People's Capital Group here. I see more people are jumping on the webinar, which is great to see. Again, if you have any questions, please put them in the chat as we go along here. I encourage questions. We'll go over all those at the end. But we've been doing this over a decade. Seth Martinez and I, my business partner, we've been focusing on buying mismanaged Class C and B properties and repositioning them, making them more desirable places to live, and then either refinancing them or selling them to create proceeds and profits for our investors and tax depreciation along the way and cash flow when available as well. We are vertically integrated, meaning we have an in-house property management company, so we can improve the management of these assets more aggressively than other companies reliant on third-party management. This building's a perfect example of something mismanaged. I'll show you in a minute the pictures of the backyard. It's a mess. The basement has a lot of potential. That's just filled with construction debris. The rents are about 30% below market value. There's no real strategy for the garbage. They just put it in the basement. There's no garbage bins. We have decades of experience repositioning these kind of classic mismanaged properties and also focusing on the New Jersey market, strictly New Jersey market. We've done over 300 transactions here in New Jersey. We've been operating here since 2011. We are 100% dedicated to New Jersey. We don't buy in the boroughs of New York City. We only buy in northern New Jersey, generally about an hour to no more than an hour and a half commute into Manhattan. This building is one block to a bus terminal that allows you to commute into Manhattan in less than an hour. We have very close industry relationships, meaning we can source these properties off market. This is not sitting on the internet. This is an off market deal. The last time this property was under contract is $8.4 million. Now it's under contract with us for 7.65. And so we focus on sourcing great deals for our investors that are discounted properties with value add opportunity. We have our own sales and leasing team. We have third-party contractors, and that's what we focus on here at People's Capital Group. At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. We also focus on risk-adjusted returns. So we're pretty conservative when we go to underwrite opportunities. This property we're actually looking to sell at year 5. So the returns are targeted a little bit higher than usual. Usually we actually are looking to refinance consistently. So the return targets are a little lower. We also really focus on transparency with monthly updates on exactly what's going on with your investment. Quarterly financials that break out the details of the investment, the balance sheet, a profit and loss statement, a distribution statement every single quarter. We also send out monthly rent collection reports along with the updates that are very detailed. I get a lot of great feedback on our updates. They're very in-depth, and people say we give a lot more information than other real estate operators. So we take pride in our transparency and our consistent communication, whether we're facing headwinds or having, right on target and on budget, which we are with most of our projects. So Our main goal is to always be communicative and transparent in our operations. We have an investor portal that investors can log right onto to see how their investments are doing, check out new opportunities and past performance of People's Capital Group. I'll put that up towards the end of the presentation here. So we've done 258 multifamily deals throughout New Jersey. Seth and I also together with combined real estate careers, we've done over 300 transactions. Here's a 21 unit in Bayonne, New Jersey we acquired last year. We are on schedule and on budget with the renovations on that property, and we're looking to refinance over the next couple years. Here's an 11 unit actually in Paterson, New Jersey, not far from this asset, where we recently had a refinance about a year ago, where we were able to return 50% of investors' proceeds over 2 years on that 11 units. So really achieved way ahead of target on that asset, which, by the way, is about a 24% annualized cash on cash return when you get 50% of your investment back over 2 years. Here's a 6 unit in Passaic, New Jersey. We recently sold this asset. We were able to achieve above target to the investor. We were targeting about 11.1 cash and cash. We achieved 11.7% cash and cash to the investors on this asset. So that was right in Passaic, New Jersey. We recently sold it. We purchased it for $450,000. We refinanced it 3 years in. Then we sold it about a year and a half later. So it was somewhat similar to this project here. And we were able to sell it for about $990,000. We put in about 70,000 or so in renovations. So really an interesting asset there that we were able to get great returns to our investor. Our track record, our average internal rate of return for full cycle investments is around 14%. We've completed over 300 transactions in New Jersey. We have an 81% investor retention rate, reinvestment rate, meaning after a liquidity event, about 8 out of 10 investors reinvest capital into our next opportunity. So we're very transparent with our updates. We perform as targeted, and that's why investors continue to participate here at People's Capital Group. There's Seth Martinez on the right. There's me on the left. So we focus again on this New Jersey market. We try to obtain very high returns to our investors consistently. We've completed 9 syndications. We have over 100 people that invest with us here at People's Capital Group. And we have 3 goals for our investors: preservation of capital, return of capital, and return on investment. So we want to make sure, first of all, don't lose money. We want to protect your investment. We do this through a cost segregation study, which we'll do on this asset when we buy it. So that allows investors to write off about 30% of their investment in 2024. So if you invest $100,000 in this asset, we'll do a cost segregation study in 2024. So you get about $30,000 of tax depreciation on your K1 that's issued out in the beginning of 2025. So you'll get a $30,000 tax write-off for 2024, which is great for investors that have big passive gains in 2024. Now remember, those are passive tax write-offs, not active tax write-offs. So you can't use that to write off, say, your W-2 income or income on active businesses or properties you manage. But if you have passive investments that create a passive tax burden, this can create a nice tax write-off for you in 2024. So we preserve capital through quality assets and high demand markets. We aim to return capital through refinances, where we're able to, in this case, our target return is about 85% of investors' capital at month 37. And then, of course, return on investment, right? Cash flow, sale proceeds from a property. So this allows us to create a high return on investment for investors as well. Okay, so here's the property address, 53-61 Henry Street, Passaic, New Jersey. It is a 42-unit Class C apartment building with rents 30% below market value. It is 9.3 miles to New York City. It's less than a mile to the Passaic train station. It's 1.3 miles to Garfield train station. There's 11 bus stops within 5 blocks, including the main bus terminal in Passaic. So really the fastest way to commute into Manhattan, if you lived in this building, would be to jump on one of those buses within the 5 bus stops or go to the main bus terminal, which is 1 block away, and jump on a bus. And in about 55 minutes, you would be in Midtown Manhattan. There's the Caucus, Montclair, Newark, Hoboken. There's Manhattan. There's a GW Bridge. So really a nice location here, very close to Manhattan. but not paying Manhattan prices. So the Henry Street portfolio is undermanaged, Class C properties we discussed. We're looking at putting about $1.1 million to renovate this property over the first 3 years of ownership. And that's going to allow us to release the units for market rent, which we target about $2,150, which I think, again, is very conservative. Property was built in 1950. It's a 4-floor building. We have 1 studio, 13 one-bedrooms, and 28 2-bedrooms. Here's a little more on our business plan here. Market rents, it depends how you calculate them. 38%, really, we're looking to increase rent around over 38% throughout the entire building over that first, actually over the 5-year period completely. So we're looking at $1,072,500 in renovations here. We'll do a full rehab. We're targeting about 21 units. We'll do a light rehab on about 19 units. Basement flooring and lighting, laundry room in the basement, storage build out as well. That creates multiple income streams on the property. So not only does it improve the value and the tenant experience as well in the property, having a place for them to do laundry in the basement that's nice and well lit, having a storage that we can either use to incentivize, just kind of wrap it into the rent and increase the rent by a small amount, or we can use it to, if a tenant is, agrees to a certain higher rent, we can just kind of include it in the rent as well. There's different ways to use storage in the basement. Then your common area, a large contingency of almost $100,000. We've been doing this long enough to know that you don't know what you don't know. And overall, the rent right now is about $13.99 a month on the building. Our target is to increase the average rent on the building to about $19.35. We believe over the 5-year period, we can do this. Really over the first 3-year period, we aim to accomplish this goal. At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. PCG has budgeted over $100,000 to add amenities to the property. You can see the backyard there is a complete mess, completely let go. There's basically just people just throwing trash in the backyard. That's fine. That's what we look for. We look for properties that are kind of the uglier property on the block. That's how you make your money in this business, right? If you're paying top dollar for the most expensive, most fancy property on the block, then you're not going to really make a great return on investment. By buying the mismanaged, less attractive buildings on the block, then that is how we make solid returns for our investors over time. We have higher vacancy rates for laundry and storage there. You can see it doesn't make a whole lot. We're not targeting a whole lot from these amenities. It's really more about having the amenity for the tenant. Obviously, the backyard is just an investment in the overall feel of the building and the amenities for the tenants. But when the appraiser comes out to the building for the refinance or for the sale of the property, you want to make sure you have these amenities. And not only are you creating more income to your bottom line, but what really it shows is that, hey, this is a Class B building now. We have a nice backyard area with a dog run and a barbecue area and a little playground for the kids. We have the amenities of laundry in the basement, of storage in the basement, so the tenants can live a more enjoyable lifestyle in our building. And that's what allows the building to appraise at a lower cap rate, increasing the property value overall, and just increase the appraisal value of the property. So we achieve that refinance target and we achieve that resale target as well. Little more about the location of this building. So we have ShopRite, we have the Memorial Elementary School that is literally 2 blocks away. We're also right down the street from a private school. We're about 200 feet away from a private school, very nice high-end private school. You have TD Bank there, the Kindred Hospital, the Passaic Academy, Passaic High School as well. It's walkable to many locations here and public transportation also with those multiple bus stops around that area. Here's the history of Passaic. We'll put this deck up on the investor portal so you can access this deck and read into it. This is really neat what our underwriters do, what they come up with. I was enjoying this as a bit of a history buff, but Passaic's been around for a while. It was a textile focused city in the early 1900s and had a bit of a slowdown then for between 1920 to 1980, but it's really having a renaissance now, like many cities in northern New Jersey. You look at Newark, New Jersey, how that's boomed over the last decade and a half or so. Now, even Paterson, New Jersey is really becoming a much more attractive market also. And Passaic is not far from either one of these markets. We're very close to the downtown area. You can see kind of where the yellow is here on the main Ave. We're right there. We're 1 block away from grocery and shopping and storefronts and restaurants. So there is a nice strategy here for this town, an overall town plan, city plan to improve this area, encourage more development, increase the desirability of this city. And we are in the second ward there, which is a nice little spot there in Passaic in the downtown area. So here's the Passaic, New Jersey redevelopment plan. And we don't have to go through all of it, but essentially more transit-oriented development, pedestrian and retail streetscapes, economic growth as well, with solid, real concrete investments into the city. The 12-story People's Bank and Trust building is the tallest structure in Passaic, dated back to 1931. Until its redevelopment in 2016, the building sat vacant for 20 years. So you can imagine what type of impact that has on a city when the tallest office building is sitting there vacant. But now it's occupied and the transformation is being reborn in this area. So that's the types of areas we like to buy in. Seth and I invested in Newark, New Jersey in 2013, 2012, and those properties are worth multiples of what we paid to them. The first building I bought was near Rutgers University in Newark, New Jersey. I remember people saying, well, why would you ever invest in Newark? That building, I bought it for $135,000. It recently appraised for the mid sevens. I probably put maybe $80,000 into it over the years, so just phenomenal investment in a phenomenal location. That's where we try to find buildings that are in areas that are having a renaissance, right? You don't want to necessarily buy in the hottest market at the hottest time. That's not really how you make money in real estate. You actually buy more on the ground floor as you see cities improving themselves, becoming more desirable cities that already have strong infrastructure in place, like train lines and bus routes, and office buildings, things that are already in place that just need to be really improved and for the population to grow and demand to grow. And there's already a shortage of housing in North Jersey. So that's why we feel that this is a strong long-term investment. Strong demographic base, 55,000 households within a 2-mile radius. 60% of households are renters in Passaic. There's a 1.5% vacancy rate. That's extremely low. You can see the 11 bus stops within 5 blocks. So you have your pick there of which bus you'd like to get on to commute all around northern New Jersey and into Manhattan. The Main Avenue bus terminal just received $15 million in federal funding. It is expected to complete ahead of schedule. That's literally right here on this map. So you can see that that's a great way to, you can just walk a block and a half over here and you are at the main bus terminal for the city. From there, you can take buses all over northern New Jersey and into New York City. All right, let's dig into the underwriting here. Again, if you have any questions as we go along here, just write them in the Q&A or the chat. I'm going to handle all questions at the end of the presentation. So we are looking at an equity raise of, in total, $4.2 million. Us, the GPs, the general partners, will bring in a portion of that. We are getting a loan. Actually, we have a term sheet from Greystone here, pretty decent rate, $5,049,000 for about 5.9% interest rate. Rates just came down, which is pretty interesting. So we are also kind of waiting to lock in that rate because we do think rates are going to drop again pretty soon. Ideally, the Feds will be meeting pretty shortly in September, and we do expect the Feds to drop rates in September. So we'll probably wait till then to lock in our rate. We might even get a little better than a 5.9 rate, but it's not terrible. We have a 7.65 purchase price. That's $182,000 a unit. We have 4.6 in closing costs. We have our soft costs, our legal and pre-development, our hard costs as well. That's our hard renovations into the property. If you'd like a breakdown of this, you can email us as well. You can reply to any of our emails from info@People's Capital Group that you probably received to jump on this webinar, or if we're connected on LinkedIn, you can write to me on LinkedIn as well. Or if you're already one of our investors, you have my email address, aaron@peoplescapitalgroup.com, and you can email me and I'll send you the underwriting spreadsheet for this offering. It's very in-depth, and you can see how in-depth our underwriters go with these assets. We work with a team from UBS, and these guys are super sharp. So it's really neat what they put together, the underwriting Excel file for this asset. Cash on cash return. Let's talk about cash flow. Everyone loves cash flow. So year one, we're turning over units. We expect to lower cash flow about 2.6%. Year two, we're continuing to turn over units and renovate them and lease them up for fair market value. We expect about 4.8% cash flow during this time. By year three, we're doing pretty well. Ideally, we've stabilized a lot of the asset. We do expect some holdout. There's 4 rent-controlled units. We expect 3 out of 4 of them to accept our cash for keys offer. We've allocated $7,500 per unit in cash for keys for those 3 of the 4 units. We expect 1 to hold out. That's usually the case. It's hard to predict, of course, exactly who would accept our cash for keys offer and who won't. But overall, we expect the cash flow to be about 9.2% on the asset as we renovate units, lease them up for fair market value. 38 of the 42 units are free market. Here's our underwriting assumptions. We have our assumptions in rent, $2,110 for our 2 bedrooms. He's actually already getting $2,100 for those units, $1,600 for our 1 bedrooms, $1,400 for the studio. And we have our laundry and storage income, pet fees as well. Right now, for example, the landlord doesn't accept pets in the building. That's a no-brainer. People love their pets, and not accepting pets in the building eliminates a lot of tenants, qualified tenants that can be very good tenants. So by accepting pets in the building, first of all, you can charge a pet fee and you can make a larger income there. We might even increase it from what we have here. And secondly, you open it up to quality tenants that way. Obviously there might be some restrictions. If you have a huge aggressive dog or something like that, you want to be careful. But allowing pets in your building is a great way to increase your rent roll and attract quality tenants. Get your units leased up faster. Rent inflation, we assume a 3% rental inflation in this market, which is somewhat conservative. We've seen much stronger than that in the past, but we don't want to assume that the past depicts the future of rental inflation in this market. Here's our expenses. Insurance has gone up significantly. We do have a quote for that. That's an accurate quote. We have different pest control, repairs, and maintenance. Remember, when a realtor sends you numbers on a building, they conveniently forget a lot of these things: landscaping, snow removal, accounting, and legal. Okay, so we have our expenses there as well. At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Here's our financing assumptions: 66% loan to value, roughly a $5 million loan size, 10-year loan term, 5.94 fixed interest rate for 10 years, 3 years interest only, 30-year amortization. So decent rate quote here, decent debt quote here. So, we're looking at ideally seeing rates come down in the future. Here is what the economists predict rates will do over the next 5 years. You can see our chart there in the bottom right. And so we do assume when we refinance this loan, we'll be about 200 bips above SOFR, which would give us a rate of maybe 5.2% on the refinance. So we expect to then complete our refinance and take out a loan of about $8.65 million at month 37 of ownership of this asset after we reposition it and increase the net operating income on the building significantly. We have a debt coverage ratio right now in the building of about 1.2%, 1.25. Yeah. Mm-hmm. It's 1.2 actually, our acquisition loan. Okay, rental comps. So here we have our subject property. You can see the comps we have are 85 Pennington Ave, built in 1940, 5 stories. You want to use rental comps of similar properties built in a similar time. That's a 60-unit building. They're getting about $1,325 for their studios, $1,650 for their one bedrooms. We assume our renovated one bedrooms will go for $1,600. They have a 3.3 vacancy. We assume a 5% vacancy. 112 Gregory Street, 46 units, 4 stories, similar to ours, laundry on site. They're getting $1,725 for their one beds. We assume $1,600. They're getting $2,100 for their two beds. We assume $2,150. 82 Paulson Street, built 1945, 4 stories, 36 units. They're getting $2,150 for their two bedrooms. We assume $2,150 for our two bedrooms. They have a 2.8 vacancy rate. We assume a 5%. Operating cash flow, you can see our yield on cost grows over time, ideally starting at about 4.5%, growing up to 8.3% by year 5. Again, if you want to review these numbers in more depth, take a look at our very in-depth due diligence spreadsheet on this. You can always reach out to us. You can reply to those emails you receive, and we will send you the Excel spreadsheet that shows how we underwrite these assets with our very experienced underwriting team. Substantial value creation and return. So we assume a 6% cap rate when we go to sell the asset. We're buying it for about 5.9 cap rate right now. Generally, you pay a bit of a premium for value-add properties. I know it seems crazy, but you pay more to buy value-add properties because the seller and then the buyer know that there's a lot you could do to this asset to improve it. So ideally, you're kind of paying a bit of a premium to buy something that you can really improve the value of. On the flip side, when we go to sell the asset, it'll be pretty tapped out. We'll have done pretty much everything you can do to increase the value of the asset. Now, there may still be room to grow the rents. There may still be some other units to fully renovate as we're doing some partial renovations on some of the units. But for the most part, we expect a 6% cap rate on the resale. It's about $13 million asset value on the back end, about 4.2% closing costs. So we're looking at a gross levered IRR on the project of 21.8. For our Class B class, that's $1 million minimum investment. That's a 20.3% levered IRR. For our Class C, that's a $100,000 minimum investment. That's an 18.9% levered IRR on this investment. That's an annualized internal rate of return. The annualized AAR is 15.1 for Class B and 13.8 for Class C. The equity multiple is about a 2x for Class B, about a 1.9x for Class C. So what that means, if you invest $100,000, you'd expect to walk away with about $190,000 from the total investment. That includes your cash flow, your refinance, your proceeds from sale. If you invest $1 million, you'd expect to walk away with about $2 million from the investment. And we also have a 10% preferred rate of return for the Class C and a 12% preferred rate of return for Class B. Here's our resale comps. We see a property in Passaic, New Jersey, selling for $358 per unit. We're estimating about $317,000 per unit on the resale of this asset. That's a 6% cap rate. Obviously, we don't know where the market will be 60 months from now, but we want to use our comps from today and our cap rate analysis to assume what the property could sell for upon resale once it's been completely repositioned. A little more about People's Capital Group here, and then we'll wrap up for questions. Again, if you have any questions, I see more people joined here. Feel free to write them in the Q&A or the chat. So we do target and have achieved about a 12% annualized cash and cash return overall on our exited investments. Compared to what most syndicates are achieving, it's about a 49% difference. So we really try to underpromise and overdeliver on our investments here. We focus on multifamily and mixed-use properties throughout New Jersey. We're strictly Jersey focused. Our investments are completely passive, meaning you get monthly updates, quarterly financials, quarterly cash flow distributions when available. K1s at the end of the year are done for you. Everything's done completely for you. You'll have an investor portal you can log on to. You can access your updates at there anytime, although they are also emailed to you along with your financials. Your tax returns, your K1 tax returns are done for you, and they're put up in your investor portal as well. So you can log right onto your portal, see how your investments are doing, similar to having a stock account with Ameritrade Financial or something like that. You can log right on. Everything's done for you, but instead of stocks, it's real estate. Again, we focus on three key approaches here. We go to buy a property with our investor base. We focus on preservation of capital, making sure your capital is protected, right? Rule number one, don't lose money. Secondly, we focus on return of capital. We do that through refinances along the way. We try to refinance the asset as soon as it's stabilized. In this case, around month 37, we expect to get 85% of your investment back on the refinance. And a return on investment, right? So cash flow, proceeds from the sale. We want to make sure you have a profitable investment with us, and we're achieving double-digit returns on your investment. We've talked about this already, 300 transactions, 100 investors, vertical integration with property management here, 10-year track record, only in New Jersey. We strictly focus on New Jersey and properties within an hour of New York City. We see an inherent need for housing here, a shortage of housing, a declining in home ownership rates and single-family starts. So they're not building enough housing in North Jersey. We focus on tax advantages here. We'll do a cost segregation study. We'll front load the tax depreciation on this asset in 2024. You'll get about a 30% tax write-off in 2024. We also focus, of course, on hard assets, favorable demographic trends, and being able to sell the assets and refinance the assets to keep liquidity in your pocket. So we focus on repositioning properties, core and core plus and value add types of properties. Really core plus and value add is our specialty. We already went over a lot of these. Here's our case studies. We don't have to dig into this now. I'm probably going to open up for questions here in a second. But we've achieved very strong returns for properties right around this building, an 11-unit in Patterson, 23% annualized cash and cash return upon the refinance to investors. We refinanced that in 2 years. This property in Passaic, we refinanced in 3 years. That achieved an overall upon the refinance and the sale about 11.7 annualized cash and cash. That was higher than our targeted cash and cash return for this asset. We bought it for $450. It refinanced. It appraised for $730 3 years later. At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Here's our 21 unit in Bayonne that is on schedule and on budget. We'll look to be refinancing that in 1 to 2 years. We purchased that last year. Here's our 25 unit in Marion Street in Patterson, New Jersey. Our project is on schedule. We're looking to refinance that next year. And in fact, around mid to beginning of next year, we'll be looking to refinance this asset and get about 50% of our investors' capital back. We target about a 12% annualized cash and cash in that asset. Here's our 27 unit in Rahway, New Jersey. This just produced a nice cash flow check to investors. Our project is ahead of schedule and on budget. We'll probably wrap this in with the last property, that 25 unit in Patterson, and refinance these together middle of next year. So we can get about 50% of our investors' capital back on those refinance, which is our target. There's me on the left, there's Seth on the right. I focus on investor relationships, equity funds, structuring the equity funds, making sure our investors are kept abreast of their investments with us. And I do a lot of family office networking, public speaking. Seth is more on the operations end. He runs our debt fund, which is how non-accredited investors can invest. Our debt fund is a fund that's essentially our own hard money lender. We use it to lend to our own projects only, which are fix and flips and land and small multis that we buy throughout New Jersey. And we flip those much more quickly. Those are smaller acquisitions, but shorter investments as well. And investors invest in that debt fund. They earn an interest rate between 8 to 11%, and that allows them to be a lender to the debt fund. So that is something that a lot of our investors like as well. That's if you're not accredited, you can participate in that also. This opportunity is for accredited investors only. We went over what that definition is at the beginning of this presentation here. Here's some more information about us. I actually wrote and taught a course at real estate at a Rowan University where I also graduated from called Real Estate Entrepreneurship. It was a ton of fun. It was a lot more work than I thought. I don't think I'll do it again until maybe I'm retired or something like that. But we have a real estate network called the New Jersey Real Estate Network. We have about 5,000 members in that. We'll have a networking event coming up pretty shortly. We also do walkthroughs of properties. So, for example, we'll probably do a walkthrough of this asset once we close on it. We have over 100 investors, been a guest. We have about 160 podcast episodes. So check out our podcast, the Passive Cash Flow Podcast. There's Seth. He had sold a medical billing company and got started in real estate that way. I was actually Seth's realtor back in 2011. We met at John Steingraber's event when he was doing in Garwood, New Jersey. And I started selling Seth properties. And I said, wow, this guy's stealing properties in like Newark, New Jersey for like 60 grand. Now they're worth like $500,000. And so I was helping him buy properties and get great deals. Seth was liquid. I was not, but I knew how to source great opportunities. So we teamed up. We bought a 25 unit together. We repositioned it and sold it and said, hey, this is a pretty good model. We fixed and flipped over 50 properties together. We've wholesaled over 100 deals. We've done 9 real estate syndications. We've done about 300 transactions in New Jersey here collectively. Most of them combined, over 250 of them combined as partners. So Seth and I have been through thick and thin, hot markets, slow markets, COVID, and we understand our roles in our company, and we're really good partners. We complement each other's strengths and weaknesses for sure. So that's the origins of Seth and I here at People's Capital Group. And here's Lena Delgado on the left. She's our property manager. She runs our property management firm. She has a number of people under her, contractors, virtual assistants, leasing agents, people, different interns and so on. And she's great at what she does. She works so hard. She's just really on point and a priceless asset to our company. There's Dana Sargenti. She's our bookkeeper. She's the one that makes sure those checks go out on time, those K1s go out on time, and she's amazing at what she does. 35 years of bookkeeping experience, reconciling accounts, cutting those checks. You want to be nice to Dana. She's the one that cuts your check at the end of the day, right? Sends out the distribution through our investor portal there. So, of course, we oversee all that. Robert Grulich, our CPA, he helps prepare tax returns, tax planning, and tax strategy. Here's some of the transactions we've done over the years. Over 258 transactions completed together. Seth and I, we don't have to go through all of them. Here's some testimonials from our investors. I've invested numerous times with People's Capital Group over the last 6 years. I'm happy with my investments. He's an 8-time investor there, Robert. Here's Chris, 6-time investor. I've been investing in People's Capital Group for nearly 5 years now. Cannot be happier with the returns and the process and the returns of my investment. Aaron, Seth, and their team have been great to work with. They're like clockwork in their updates, communications, and payments. A great company. Here's Tim C., 6-time investor. I continue to grow my investing relationship with Seth and Aaron. They have a great history of buying properties at a good price and offering me value. It's Gary C., 7-time investor. My confidence in Seth and Aaron has been rewarded with professionalism and wise investments since I started investing with them in 2014. Rita, 3-time investor, very satisfied with my investments at PCG. I've been able to sell my rental property, no longer have to be a landlord, yet I'm able to still make money in real estate thanks to PCG. Craig B., 4-time investor. My investments have been on the mark, and I like not having to manage the properties, right? That's the big headache of real estate. All right, ladies and gentlemen, that's it for me, Aaron Fragnito here. I'm going to answer questions now, and here's a little QR code to schedule a call with me. I also put in the chat a link to schedule a call with me, Aaron Fragnito. That's the next step to talk about if you're an accredited investor. Also, if you'd like to access the deal room where you can complete a soft reserve. Again, this is for accredited investors only. The minimum investment amount is $100,000. You can do that right through our emails that we send out and right in our deal room there. So on the investor portal, if you're an existing investor, you know what I'm talking about with the investor portal. If you're a new investor, you can go back to the email you received that invited you to this email, this webinar here. You can click on investment details, and that will allow you to review all the details of this investment. I'll put this pitch deck up there as well after this presentation. I'll put up a copy of the webinar also. And right on our investor portal, you can do your due diligence and complete your soft reserve on this investment. We are going to be accepting soft reserves for about the next 2 weeks. We're moving quickly on this one. We have some family offices looking at writing a very large check. They may just fill up whatever else is available in the offering. So if you are looking to invest less than $4 million, then you'll want to get in on this investment very soon. Because what happens is with family offices and high net worth individuals, a lot of times they say, well, how much is left? How much is not, spoken for, right? It's because we have soft reserves coming in on the investment at all times. Let's say there's 2 million left on the investment, and what they do is they'll write a check for 2 million, right? Finish off the investment. So that's how a lot of our family offices work. So you want to make sure if this is a fit for you, you go to our investor portal or schedule a call with me, Aaron Fragnito. Let's connect. Let's learn about your investment goals. Let's make sure this is a fit for your investment goals. If you're already investing with me, then you can go right to your investor portal, complete your soft reserve, lock in your spot on this investment, and that way you can get in on this one before family office scoops up all the availability on it. Let me get into the questions we have here. Okay, Robert wants to know if a recording will be sent out. Yes, I'm going to be sending out a recording to everyone who signed up for this webinar. I'll also put the recording up on the investor portal. Okay. And I'll get the link as well to the investor portal. I'll put that in the chat also. In the chat right now is a link to schedule a call with me, Aaron Fragnito. Jim asked, how can I invest if I'm not an accredited investor? All right, so Jim, unfortunately, this opportunity is for accredited investors only. But again, if you're not an accredited investor, we do have an option for those investors. That's our PCG debt fund. Now, our PCG debt fund will be wrapping up pretty shortly, in the next 3.5 weeks or so. However, the debt fund allows investors to actually lend money and act as a lender, and you can earn an annual interest rate between 8 to 11% on that investment. So one of the benefits of being a lender is that you know exactly what you're getting when you're getting it. See, an equity investment does target much higher returns, and we were talking about 19 to 20% internal rate of return on this investment. So obviously, that's a much higher targeted return than the debt fund. However, as a lender, it's cut and dry, right? You're investing a certain amount of money, you know exactly what you're getting when you're getting it. So it's a great option for our non-accredited investors. Also invest if you're accredited. And that's our PCG debt fund. So that can be a great option for investors as well. So I encourage you, Jim, if you're a non-accredited investor, to go check out our PCG debt fund. For that one, you actually do have to schedule a call with me. All right. It's not publicly marketed. So Jim, what you want to do is you want to click the link in the chat and schedule a call with me. I first have to talk to you about the investment, make sure you're qualified as a sophisticated investor, and then I can send you over the information on that debt fund. Okay, but first we do have to talk. That's the difference between the debt fund and this offering. This offering, I could do a public solicitation. Here's I'm doing. It's for accredited investors only. It's a 506C that allows me to do a webinar like this and put it all over LinkedIn and the internet. But for the debt fund, we don't do that. It's a 506B, so there are restrictions on that. So I can't publicly market it like I do with this. Okay, Shane asked about the waterfall. I saw a waterfall chart in the previously sent documents. Can you explain the waterfall? Sure. So here's how the waterfall works on this investment. So we have different hurdles that need to be accomplished. Okay. At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. So Class C, $100,000 minimum investment. Okay, up to a 10% internal rate of return. Okay, it's an IRR, internal rate of return. It is split 97% to the limited partners, 3% to the GPs. We bring in 3% of the capital. After that, after we achieve a 10% internal rate of return to the limited partners, it then goes to an 80-20 split between 10% to 15% IRR. Okay, 80% to the LP, 20% to the GP. After we achieve a 15% internal rate of return, okay, that's the second hurdle, then the GPs get 40% and the LPs get 60%. That's up to a 20% IRR. Once we achieve a 20% IRR to the limited partners, it reverts back to 40% to LP, 60% to GP. So what this does is it protects LP investors on the downside. It gives the majority of the investment to the investors up until a 20% internal rate of return. So again, the first hurdle is a 10% preferred rate. Okay, 97.3% is the split, 97.3 for up to 10% IRR to the LPs. Then it's a 20/80 up to a 15 IRR to the LPs. Then it's a 40/60 up to a 20% IRR for the LPs. Then it's a 60/40 after a 20%. So it incentivizes us as GPs to do very well, to get a greater than targeted return to our limited partners, get the project done faster, rent the units up for more than targeted, sell the building for more than targeted, refinance for more than targeted or sooner than targeted. And that allows us to then do better ourselves. So it's a structure, a waterfall structure really aligns the interests of your limited partners, the individuals bringing in the majority of the cash, the passive investors, and the general partners, us, People's Capital Group, who are running the project day in and day out. All right, so that is the waterfall structure for a $100,000 minimum investment. Now, for some reason, my computer is frozen. I started saving another document here, and it's not liking it very much. So Excel is having a little breakdown here. But then there's also $1 million investment here. That's the B class. Okay, that's a 12% preferred rate of return. And then it's a 90-10 split with 90% to the LP, 10% to the GP. After that's the first hurdle, okay, between 12 to 15 IRR. Then again, the next hurdle is a 15 IRR. After that, it goes to an 80-20 split with 80 to the LP, 20 to the GP. After 20% IRR to the LP, it goes to 50-50. All right, so obviously a little more of an advantageous to the LP waterfall and a higher preferred rate of return as well. That's for $1 million investment. And people will ask, well, why do individuals making $1 million investment get a higher pref and a more attractive waterfall? Well, the answer is $1 million is 10 times more than 100,000. So we do value, it's important to offer those investors an incentive to invest that large an amount. Now, what some investors do is if they don't quite have that $1 million, they pool together other investors. They start an LLC and they invest, they pool together $1 million doing that. And now they can achieve that higher share class. That's called a fund of funds. Most investors don't do that. We do have a couple that are able to do that. Doctor groups, things like that. Family offices, high net worth individuals that have other friends that are high net worth individuals. But that is one way to get yourself into that better share class, to pool together capital with other investors, start an LLC, and then that LLC can write one large check for $1 million to get into that better share class, increase your pref rate from 10 to 12, and make a more attractive waterfall there as well. Regardless, still a 10% preferred rate of return is very strong, right? That means that investors are earning that preferred rate, and that accumulates through the life of the investment as well. And then, of course, we have the waterfall split beyond that, which aligns our interest to do very well as operators. So that's how the waterfall split works on this investment. This is our in-depth spreadsheet. So in-depth, it is making my computer freeze right now. I tried to save another one. So anyway, looks like that's all the questions we have this afternoon. So as I said, I'd wrap up here at 4 o'clock. It's 3:59 exact. And we try to do what we say we're going to do here at People's Capital Group. So I'll let everyone go now. Again, if you're interested in learning more about this project here, you want to schedule a call with me. And that link to schedule a call is in the chat. Okay. If you'd like to take a look at the offering here, then I'm going to put that link in the chat as well. And I'll do that right now. So this link allows you to get into our investor portal. Okay. Just sent it out to everyone here on the chat. That way you can take a look at all the in-depth numbers on this investment. You can dig into the opportunity here on our investor portal, and then you can complete your soft reserve. So again, we're going to be completing soft reserves over the next week to 2 weeks on this investment. Our PPM should be ready to accept capital September 3rd to September 4th. So once we start accepting capital, we're going to close out our soft reserves and just start accepting capital from investors. We also expect some family offices we're in talks with to complete any available spots in this investment before that period. So if this is an investment opportunity that works for you and aligns with your investment goals, I would suggest you either schedule a call with me on the link there through Calendly, or click the link below that I just put in the chat to go into our investor portal, do your due diligence, and complete a soft reserve on this investment if you're an accredited investor and looking to put to work a minimum of $100,000 in high demand real estate in New Jersey here. Hope you enjoyed our presentation. My name is Aaron Fragnito with People's Capital Group. I look forward to connecting. Thanks a lot. Have a good day.